guys, it's November the 17th. And remember, we've got options expiration on the monthly. We've got pretty much we're coming to the end of the year because like I have said in other episodes, after Thanksgiving, all bets are off. The only people that are doing things in that last month are day traders and people that are just seeing a really good setup for 2023. Now I'm going to share my screen. We're going to talk about market setup as we always do. And the cruise liners, strangely enough today, Royal Caribbean and Norwegian cruise lines are getting clobbered because of this news flow on Carnival. And I actually think it's the wrong direction to be trading Carnival because of the news flow, but we'll kind of talk about that in a second. And then I'm going to go through just a touch on Alibaba. As you guys know, I've been very positive. It's up a lot today. And then we'll take questions. All right, let's get into, let's share the screen, past performance. It's not indicative of future returns. Hold on one second. Let me prep. Oh, it always scares me when I start to share. All right, here we have the indices here. Let's go back here, looking at all these charts. But if you want a really good chart, we've got Richard in the AM on Gurula, so check him out. He always starts the morning off. But we can see that these indices, which were down 1% plus at one point, have recovered aggressively. And, if you are a subscriber, paid subscriber, you'll get Gurula.net. And we've been talking about different signals and what we've been seeing on the markets in general. This market wants to buy. And in fairness to whether it's technical or fundamental, I do actually think a lot of the fundamental people and even the macro people are coming to the end of their string to justify selling this market the way they have been. And I'll tell you, it really comes down to the fact that we have had exceptionally strong earnings this quarter, the third quarter, which is usually the weak quarter. And by strong earnings, I mean, pricing is getting through, earnings is actually happening. So it's being dragged down to the bottom line. So there's not, I mean, you really do want to come in and selectively buy certain companies and certain stocks. Crude oil getting clobbered yet again. I mean, still don't totally understand what that's all about, but it is nonetheless doing what it's doing. The fact is, at this $80 oil, everyone in the entire energy complex continues to make money. And if this winter starts getting cold next month, this always happens in the November period. But if we start to get colder temperatures, it's going to be all bets are off. Now, it looks like my Yorkie is going to react to this Amazon delivery guy that's coming by. So we'll just see. If you start hearing barking, that's what that is. All right. Let's take a look at Finviz. I'm a huge fan of this free application, but there is a paid version as well. And if you look at it, you'll see that it's kind of a mixed market. You've got consumer down a lot. That's off of yesterday's earnings reports. We have Raw stores reporting, and I did go ahead and buy some calendar spreads that clearly are negative delta, meaning like it's a short position. If you want to do like Hail Mary puts on it, I would take a look, because the odd thing about this earnings report is I think it's scheduled for 4:30 on a Friday. What is that? I don't know that anyone's actually scheduled an earnings report 4:30 on a Friday in big cap land for decades. I mean, I don't think I've ever heard of that. So that's a really interesting one. But or you could do a strangle up a call and a put and just either direction, or you could get really crazy and you could do two calendar spreads, one that's long, one that's short, and see what's happening. But it is very awkward. It is a little bit strange that you would do a 4:30 earnings call. That's what's on their website right this minute. Maybe that's a typo or something that's stale, but realize that that's Raw stores, which I've told you, if I had to pick a direction, given what they did last quarter, I would be a little bit concerned that they have the same issues that TJ Maxx has. But you never know. She's a very talented executive, but at the same time, she's really struggled with her inventory. You won't know until you know. All right. Now let's get into why I actually like the cruise liners for whatever reason. Oh, sorry. A couple more macro things for you. We do have, so she'll report after close today, and then we'll see it on Friday. So you can still kind of get that done. It's a little bit weird for her to report so late after all the retailers. So it's not on a Friday afternoon. It's actually today afternoon. Sorry about that. That was a little confusing what I just said. Might have to edit that. And then economic calendar. We really don't have too much. And okay, let's get into the cruise liners. Here's what it is. Royal Caribbean. All right. I'm actually a fan of this, and of the cruise liners right now, it is actually profitable. That's the crazy thing. Now, let me set this up for you a little bit. Carnival Cruise Lines came out And basically the notification was that they were going to do a debt offering so that they could refinance some of the debt that's due in April of next year. Now, the difference between it, you would have thought it was a positive news flow item because the debt that they're trying to refinance is around 7.25%. And I think they're going to do this at 5.75%. So you would think, hey, we're going to move debt expense out, or debt, the principal payment out, and then we're going to have a lower debt expense. Even if we re-up it, it actually is probably a good call for this company that still needs to start cash flowing, et cetera, et cetera, et cetera. I'm going to show you in Royal Caribbean and Norwegian why I would have thought that the market would trade up, but I wasn't in the stock at all. But the fact that it's down 8% as of early morning, and I think it's kind of given some back of that loss, tells you that the desire to sell the cruise liners may not actually match the fundamentals right this minute. I'm not saying that these things are cheap, because especially one of the major metrics for all cruise liners is book value. These guys are expensive on book, but because of what I'm seeing, when these things turn, the leverage they have when they turn is kind of crazy. By leverage, I don't mean debt leverage. I mean the way in which they flip back in the other direction. And so I want to show you Royal Caribbean, which is probably the stronger of the three. Carnival's not having a conference call these days because of everything. They really haven't had a conference call for a bit of time. So let me share the screen again to show you Royal Caribbean so you can see what happened. I do have a full episode on Norwegian, but I will reference some of those slides in this episode. Here you go. You can kind of see 300% versus last year on revenue. That is getting them very close to what they made in 2019. And you might be asking yourself, hey, what's that mean as far as like, is it profitable? I mean, sure has been a lot of inflation globally. And the answer to that is you're right, there has. It's been a double on their cruise operating expenses. But like I said, revenue's up 300%. So this is really, really great. Now, I am struggling to go through the data or listen. I must have missed it on the call, but occupancy rates, they didn't really announce. Realizing though that Royal Caribbean does actually oftentimes end up with occupancy rate greater than 100%. I feel like I saw somewhere that it was around the high 90s at this point. But what you got to understand about that is, unlike hotel rooms, these guys can absolutely run at a significantly higher occupancy rate than 100%, because all you're doing is you're taking the number of rooms and dividing by the number of people on the boat. Not, is very important, not the number of berths, BERTHS, as the denominator. So when these guys are get going, they can really quite very much so get going. It also turns out that where they're winning the business is because the cost of other things have gone up so much that the actual offering, even with the increase in rates for families, right? For families is very interesting. As a value purchase. And that's despite the fact that this particular cruise line does own Celebrity. It owns a number of the more expensive, really luxury boats, for lack of a better way to say it. You know, you can zip line on a Royal Caribbean ship. All right. I want to show you this as well. This is a very important point. I mentioned this in the Norwegian Cruise Lines episode, which I will link at the end of this video. But Asia Pacific, it has doubled from last year, but it is nothing relative to what they used to do in the region. You can see most of their stuff is done in North America. Another thing that Norwegian has that lowers their costs a bit relative to the other cruise liners is they bought a bunch of islands in the Caribbean. So sometimes what they're doing is just taking the boat to the Caribbean island. Your package is still including that. And you can see North America doing really great as relates to that. Europe also doing pretty well, quite frankly, and you know, so on and so forth. Okay, so that's the breakup. But if China returns, Royal Caribbean did a lot of business in China. Okay, I'm telling you, the port of Singapore is a huge destination, not just for the Singaporeans, which would be the population to support it, but really it's the Chinese and folks from Hong Kong and the wealthy out of Indonesia and Australia too, even though they do have ports in Australia. So just realize that without this Asia Pacific doing hardly anything, it's a big deal that this is what's happening right now. Okay. That they've returned to profitability. Okay, let's look at the debt view. On this metric, it's part of the reason why I slightly prefer Norwegian Cruise Line, which you'll see in a second, to Royal Caribbean, even though Royal Caribbean is now profitable. It just has to do with where the debt lies. Now, in fairness, they feel comfortable that they got it. I feel comfortable that they will get it, because quite frankly, you got to realize that this debt is not like, I mean, I am grateful to have been in New York for as long as I have, so that I can every now and then just ask one of my high yield guys and friends, hey, throw me a solid and help me understand this covenant. Because you got to remember that for a cruise line, or a lot of this debt is actually asset backed. It's not just random corporate debt. And Royal Caribbean does have in their 10Q, as does Carnival, a list, because they've been doing so much more work to help investors, of which parts of this debt belongs to a boat, i.e. asset backed, and which part doesn't. And that has all kinds of implications as relates to their ability to refinance it. Just call it what it is. All right. So realize that some of that, you will, if you're gonna look at this, you are gonna have to be a little bit sharper as relates to debt. When I looked through it, I felt comfortable that they would figure out something for this 4 billion, even though it's a big number. But I also thought that, I don't know, they're right on the turn. Let's look at cash flow, just so that you can kind of see where you're taking the risk as an investor. Here is interest expense. You can see how much they've reduced that already from debt pay down and debt refinance and debt and equity issuance, quite frankly, right? So this is a big reduction. Now they're profitable. They can actually potentially redeploy going forward, realizing that the third quarter, by the way, this is going to be ending September. So you did get some summer travel this quarter, October, November, December, a little bit lighter. Going into the first quarter, that, you know, you'll start to get, so it's really the next 6 months is what we're saying. And then you kind of are off into the races. So you want to keep these on your radar screen, because if this next quarter is actually okay, then what we'll see as the boats finish up spring break here in the US and then head to Europe. And then if Asia opens up, all bets are off. It's going to be amazing. Okay, so EBITDA positive as well. It gives you a sense for cash flow. If we go to cash flow from operations, you can see they're still slightly negative, but let's look at this number, increase in customer deposits. Okay, realize that it's cash flow, so it's in continuous increase thus far. They are selling through tickets and they are getting pricing. That's what this is indicating to you. So as these boats really start to get bigger and bigger, as all of the lockdown issues have resolved, et cetera, you're going to get occupancy that's a bit higher, and you're going to see these prepaid customer deposits improve. And, you know, given how cash flow works, that actually might help them out as relates to this debt pay down, depending on how exactly they do it. All right. Some of the refinancing, you can kind of see, if we do cash flow from financing, you can see that they did already refinance a bunch of this, repayments of debt proceeds, et cetera. Where is it? Yeah. Okay. You can tell that they refinanced some of it. That's what makes me feel that with the 4 billion remaining, they got a shot, since they did 7 billion already. Do you know what I mean? Okay. Now, why do I like Norwegian Cruise Lines? They are still not quite profitable. Their operating income is profitable, but net income is not. Okay. But here's their financing. You know, they've already done the refinance bit. And then here's their debt schedule. It's really light. I mean, they're a bit of a smaller cruise ship company, cruise operator by a lot. They have this, the 332, not worried. This, the 1 billion. They feel like they can do it without doing anything additional. Maybe they can, maybe they can't, but that's where your bet is. And then realize that their debt is at 7 3/4. That's the highest debt cost. So most of it is much lower than that. And again, like I said, these guys do have a boat. Now, what I would say, the challenge with the cruise liners is unlike other stocks, because of the nature of it, you almost have to get them right on top of the turn, because if you were to split out all the possible different ways that you could do valuation and think about value, which I probably should do that episode at one point, one of the major ways that people value specifically the cruise liners is book value. And if you look at it from a book value basis, it looks ridiculous. It looks ridiculous because of what's going on the balance sheet. Fair enough. Okay. But if you look at it on like, can it pay down the debt and change up what it looks like dramatically from a cost basis, because interest expense will go down, as well as enterprise value decreases, and then market cap will probably come up and compensate for that. And then everything just starts to flow down to the earnings line. The fact is that travel short of a massive, massive GDP slowdown and global shutdown, a war, we continue to aggravate, China and the US continue to be aggravated. There goes the dog. Anyways, those are the bets that you're taking. But if everything stabilizes, sorry, the small dogs always like to pretend like they're a big dog. Anyway, short of all those things, if those all things resolve, then that's where we'll be at. With that, I'll go ahead and start to take questions. Look at this Yorkie. He's going on the back. I'm not sure why he's sorry.
Okay. Which cruise line benefits the most when China opens back up?
It'll actually Royal definitely will benefit, but all of them have the ability. So Royal Caribbean has a bunch of European lines that it can easily move via the Mediterranean through the Middle East all the way down to China, right? But really all of them have the ability to move the boats. That's the beauty of this business. You know, it's probably just that the most obvious route that people typically take to Asia is to move boats from the Mediterranean through to Asia. So what they'll do is like, everybody goes to the Mediterranean in the spring. So they'll do this big relocation thing early spring before April, May, June. And then they move the boats from there all the way through.
So which was it, Royal Caribbean that took on the debt?
All of them have debt from the COVID period, because remember, the one thing that's really always interesting about these companies, oh, there's a gardener about there. That's why. Okay, so this dog really does not like lawn care. So, sorry, anyone in lawn care. But sorry. So all of them took on a lot of debt. And you got to, one of the things to remember is that none of the cruise liners, despite the fact that they are in the S&P 500, are US based companies. They're all Bermuda based. So they can kind of fly under any number of flags, and they're a bit neutral as a result of that. So global conflict affects them a little bit differently, but not astronomically differently. What they have done in the recent period is they've redirected everything from the Black Sea, which would have been the Russian. Hold on, give me 1 second. Let me just grab these. Nope. The little ones are fast. I'm sorry. What they have done is they've moved a lot of the boats from the Black Sea to other destinations. And if you just look at the routes and the such, you can see that they didn't move as many boats to the Mediterranean during the spring. Instead, they kept a lot more routes in the Caribbean. And that comes through very clearly in the numbers. It's why the mix of Europe to the Caribbean looks a certain way. Additionally, I think what they did, well, you know what, in fairness, they probably kept Europe the same, and the boats that they would have sent back to Asia, they brought to the Caribbean. I think that's how they did it. If we really look at how the numbers would have played out, what made sense, because they don't have hardly any boats in Asia right now. And so, sorry, that was a long answer to your short question. So essentially, all of them technically could move boats because all of them have locations in Europe. All of them sail out of Europe, and all of them could move to Asia, a bunch of boats.
Is there one that would benefit the most from Asia?
No, all of them legitimately would probably move about the same percentage that as normal. Now, strangely enough, one of the boats that actually, okay, you're going to laugh, but the actual cruise company that benefits the most from Asia is actually Disney. if I was honest, because for whatever reason, they're the most popular in Asia.
Wow. Yeah, Disney, good.
But in fairness, all of them benefit the same if Asia opens up, because it turns out Chinese people like to gamble. What can you do on a boat? Gamble. So like that actually, and it turns out they make good money gambling on the boat, because the odds are not as good as if you know, historically everybody knows you gamble on a boat, the house odds if something's not right, blah, 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 you know?
Oh, good point. Okay.
But that said, that presumes the boat's casino is being run perfectly, which sometimes there have been issues, but it's been a really long time since you've had a casino boat issue on an earnings report. So, you know.
Okay. Thank you. Brilliant, brilliant. Tesla, just real quick. I know you're high on Tesla.
Yeah.
Less than 1 minute. What do you just growth or?
Look, the thing with Tesla is you got to get out of the way of the selling. Oh, I didn't do Baba today, did I? Anyways, you got to get out of the way of selling. And that's a hard thing to do. But at the same time, on every single metric you look at, there is no cheaper mega cap company. When I've asked around, like, what is it? People are so traumatized. I feel so bad for Cathie Wood, because if we're really honest about what she was analyzing and what she was saying and what the company has subsequently done, she actually looks correct, to be fair. I mean, Tesla, absolutely, which she talked about, she wasn't valuing it just based on the cars, but let's look at what actually happened last quarter. We do see the economy of scale that she talked about and was believing could happen, right? We absolutely do see Tesla taking share, if for no other reason than it turned out that they didn't screw up their supply chain nearly as bad as all their competitors. And as a function of that, they sold a lot of cars. Simple as that. Let's just keep it really simple. And the other thing,
There's still a 1-year wait to buy a new one.
yeah, they're not having an
All they
issue.
need to do is up their production.
That's correct.
Okay.
And they've been, every single auto manufacturer benefits from the improvement of what's going on in supply chain, not the least of which is lower steel costs. Okay. So I'm with you 100%. Now, the other thing that she mentioned, that Cathie Wood mentioned, that she's not getting any credit for, because everybody just likes to clobber the poor lady with comments that are not really addressing valuation. But the fact is, she had talked about the fact that there were a lot of other technologies in that Tesla was coming up with that we would see benefit the balance sheet, the income statement going forward here. And she was right. Okay. Like, for the first time, you're looking at this battery business, which was a little bit of a cash drain. Plus, you couldn't get supply on it the right way, et cetera, et cetera. And so it wasn't really profitable, or it wasn't really growing on a given quarter. But it looks actually like the last few quarters that's turned around and started to go in the right direction. None of us are confused at what just happened over the last year with Russia. So it's not like people are only interested in really nichey hippie communities and buying batteries and generators right now. I mean, even if it wasn't for Russia, you do have Mother Nature acting very crazy these days. Hurricane, ice storms in Texas, la, la, la. There's a real reason why these batteries matter. And then on top of it, the other big driver for that business is the utilities companies worried about running out of electricity during blackout because of crazy storms and stuff. Not even the fact that nat gas has gotten out of control. So there's lots of reasons why people really should at least take a look at valuation, because, I had some Reddit people, because I can't help myself every now and then when I'm like curious why stock's down, I'll go on there and just ask, when you say valuation, why do you feel like it's expensive? And, I'm just like, one of you has ever actually opened up a balance sheet before? Have you like opened up the financial statement? Because, they're all like, well, the growth rate can't continue. Okay. But if I was actually using historical growth as my metric, then I wouldn't be giving you a valuation of 0.5 peg P to growth, which you can use a peg on Tesla because there's no debt. They have a net cash position, friends. Okay. But I got to compare it to Ford, GM, et cetera, all of whom have tons of debt. Okay. So, so I will be willing to use a EV to EBITDA to growth or peg to growth. I don't care. Choose your favorite. Right. But even if I ding them for not having, in other words, don't give them extra credit for the fact they don't have debt, everybody else does, and I just use PE, right? It's cheap, right? It's trading at like 32 times earnings right now, something like that, 33. Definitely, and it grew earnings last quarter 100%. And if I want to pretend like it only grew earnings 50% because I'm going to have the earnings rate, that's where we're at. We're still not at a PE to growth of 1. And that's despite the fact that every other mega cap isn't growing nearly as fast. So that's how I feel about it. But I know there's a lot of haters. There's a lot of boys that pretend like they actually go through the financial statements and then scream at women like Cathie Wood. So that is what it is. Sorry.
Right. Well, I mean, technically it does not look good technically. So
Looks terrible technically. And like I said, Richard is an amazing trader. Watch him every morning. I certainly would. You know what I mean? If I had a little more time, I would turn him on every single morning versus occasionally after earnings season. But that man knows what he's doing. And for sure, the technicals look ugly as hell in Tesla. If you're a day trader, definitely watch Richard. He'll navigate you through these times. But if you're an investor, you want to just get some and then set it and forget it, you should. Because honestly, it's not so much as binary as that it's absolutely undervalued. I mean, just for the record, let's say you think that Tesla at 1% market share is fully valued. Okay. That's a big assumption, a big if, number one. Okay. Number two, which is more important, let's say it's not, but you think the growth rate is not going to continue at 100%. Well, then I ask you very simply, what you think the growth rate is going to be exactly? And unless you think it's going to be 30%, in other words, that thing is going to clip on down by a third its growth rate, right in the middle of the biggest global attempt to improve, to transition from the transition to EV, and also one of the biggest demands of all time for batteries of a certain type, which is what Tesla makes. So if you think somehow magically that's going to clip on down to 30%, you still got a peg that's like, it's still not trading at over its peg. I mean, have yourself a little look at everything else in mega cap. Almost all of it trades over its peg. And I'll even give them credit for this last quarter, as if they actually grew, they did not. So,
Right. Yeah. And he's, sentiment wise, they talk about him, buying Twitter, blah, blah, blah. But he's got a great staff, great people running Tesla. He wants to step down. He doesn't want to be a CEO.
Oh, he's okay. Look, yeah, I'm with you 100%. Like, the man does not deserve, look, he's not a perfect human being. And on another day, you'll probably hear me bad mouthing him when he does something that's truly stupid. But like this whole compensation discussion of nonsense actually hurts me as a capitalist. A man builds you a company to $600 billion, takes not a penny from you until past 2020, after he's moved through the tranches. All he takes is options. From 2012 forward, friends, that's the legal battle began in 2018. I think you've got some legal stuff. You've got additional notifications out there on Google. You paid him nothing. And now he's just looking for what you actually signed with him. And you're going to pretend like that was easy. I'd like to see 90% of people build a company to $600 billion, come back and find me. Do you know what I mean? That's ridiculous.
What he really did was help shareholders.
Yeah, you got one litigious shareholder. I'm looking through because I'm like, well, all of us, the investors, are going to have to pay for this damn litigation thing. What is it that he wants to happen exactly? What Elon expunges Twitter? So you've got someone who bought the company, loved, you want him to let go of it and then still remain CEO of your company? Settle down or sell the stock. That's what I had to say. You know what I'm saying? I don't understand it, but nonetheless, there it is.
Class action?
Well, it's a shareholder lawsuit, which I think means that the shareholders pay for it. It's a single shareholder that brought it up, but surely there are other people that feel in agreement with him. I'm not one of them.
It seems silly.
Yeah. I mean, I'm still looking through the legal briefs, and I don't claim to be a legal specialist. If someone's watching this on the YouTube as a replay, stick it on down there. I'm happy to become more educated, but it looked like it was one specific shareholder that's leading the suit, possibly some others that agree with him at the time. And the suit is surrounding the fact that he thinks the board is not composed of people that would be impartial to it. Most of the board that's come out has been like, I don't care how many hours he spends on the company. You know what I care about? Shareholder value. You know how that's calculated? EBITDA, earnings, market cap, you know what I mean? Like growth of the company, volume sales, stuff like that. That's what I care about. You know what I mean?
Right. And I mean, attorneys want exposure and they'll get it.
Yeah. I just assume this guy sold his shares back to the rest of us, and let's just move past being that kind of thing,
Okay, May. Brilliant as usual.
All right, take care, guys. Tomorrow I will do bye-bye. I realized I didn't do it. Take care. Bye.